Bitcoin is bleeding. And this is not just another dip. Right now, the market is going through one of its most critical moments in years. What we're seeing today is not hype, not euphoria, not FOMO. It's fear, recalibration, and reality hitting hard. After reaching euphoric highs, Bitcoin lost key support levels and entered a violent correction. Prices that once felt untouchable are now gone. What looked like a strong bull market turned into sharp drops, failed recoveries, and extreme volatility. This is the kind of movement that shakes weak hands out of the market. And this is important. This drop is not happening in isolation. Global markets are under pressure. Investors are pulling money out of risk assets. Interest rates remain restricted. Liquidity is tight. When money becomes expensive, speculative assets suffer, and Bitcoin is still treated as a high-risk asset by most of the world. That's why capital is flowing into safer assets like bonds and gold, while crypto feels abandoned. In risk-off environments, Bitcoin doesn't behave like digital gold. It behaves like leveraged tech, and the charts confirm it. Bitcoin failed to hold psychological levels that once acted as strong support. Each bounce is weaker. Each rally gets sold faster. This is classic market distribution behavior. Sellers are in control, not buyers. Market sentiment right now is fragile. Retail traders are cautious. Many are underwater, some are capitulating. Fear is easing, and when fear dominates, price discovery moves downward. This is not a market driven by optimism. It's driven by survival. But here's where things get interesting. While short-term price action looks ugly, something deeper is happening beneath the surface. Institutions are not panicking the same way retail is. Large players don't chase green candles, and they don't panic on red ones. They accumulate during uncertainty. Bitcoin is quietly transitioning from a speculative playground into an institutional macro asset. Not a replacement for gold, not a currency, but a hedge, a diversification tool, a small percentage allocation in large portfolios. That shift changes everything. Institutions don't need Bitcoin to go up tomorrow. They care about 5-year and 10-year positioning. They buy slowly, they buy quietly, and they don't announce it until the move is over. This is why price can fall even when fundamentals improve. On one side, you have short-term traders reacting emotionally. On the other, long-term capital positioning strategically. This creates brutal volatility. Now, let's talk scenarios. In the bearish case, if macro pressure continues and risk appetite keeps collapsing, Bitcoin could test much lower levels. There is no rule that says it can't fall further. Markets don't care about beliefs. They care about liquidity. In the neutral case, Bitcoin enters a long consolidation phase, sideways movement, boring price action, months of frustration. This is usually when most people lose interest right before major moves begin. And in the bullish case, everything changes fast. A shift in monetary policy, a return of liquidity, strong ETF inflows, regulatory clarity. Any of these could flip sentiment instantly. Bitcoin doesn't move gradually. It explodes when conditions align. That's the paradox of this market. Extreme fear creates extreme opportunity, but only for those who survive the volatility. Now, let's be clear about the risks. Bitcoin is still vulnerable to macro shocks. Regulation is not fully settled. Liquidity is thin compared to traditional markets, and technological uncertainty always exists. This is not a safe asset. this is not guaranteed wealth. Bitcoin is a high-stakes bet on the future of money, technology, and trust. Right now, the market is deciding what Bitcoin really is. Is it digital gold? Is it a risk asset? Is it a hedge? Or is it still just speculation? The answer hasn't been fully priced in yet. What we're witnessing today is not the end of Bitcoin. It is a stress test, a moment where narratives are stripped away and only conviction remains. This phase is uncomfortable, it's boring, it's painful. But historically, these are the moments that define the next cycle. Bitcoin doesn't die in fear. It is forged in it. The question isn't whether Bitcoin will survive. The real question is, who will still be here when the narrative changes again?